welcome everybody. I think we'll start now. Good afternoon. My name is Lisa Desoy. I'm from the Mauritius Africa FinTech Hub, and I'd like to welcome you all to today's session, which is Sustainable Finance and Innovation Opportunities with Nicole Anderson. So thank you very much for joining us this afternoon for what's going to be a very interesting session. Just before we start, I'd like to draw your attention to the Q&A function on the Zoom interface. If you're not familiar with it, if you just hover over the bottom of your screen, you should see an option for Q&A. So please do submit your questions for Nicole, and we will address them at the end of the session. Okay. So sustainable finance is a significant evolution for finance, with ESG funds in Europe projected to outnumber conventional funds by 2025. The need to understand the impact of risk associated with climate change, the value of biodiversity as a financial construct, and the changing nature of consumer finance, especially in light of the COVID-19 pandemic, will be a key discussion point for this webinar. In addition, we will be exploring why FinTech is so relevant to the world of finance and how ESG is and will be evolving because of FinTech's deep tech shifts. I'd like to welcome today's speaker, Nicole Anderson. Nicole is a venture builder, investment advisor, and member of MAF's board. As a multiple-time technology entrepreneur, CEO and founder, and an innovation thought leader, she has gained an in-depth knowledge of green impact and FinTech and sustainable finance. Her company, Redsand Ventures, works with corporate visionaries and professional investors who are unfaltering in their execution into the green economy. Redsand has built and exited over 10 disruptive ventures in financial technology in the last 8 years. Welcome, Nicole, and thank you for joining us today. Oh, Nicole, I think you're still on mute.
Here we go. Good afternoon, everyone. Thank you so much, Lisa, for the kind introduction. Very good to be with you all. I suspect many of you within certainly the Mauritian ecosystem I know, and I'm very upset that we couldn't be doing this in person, because that was actually what was planned for this week. But needs must, and the virtual stage is still very, very beneficial. I think, you know, certainly it's served us well, and I know you've got a lot coming through from Lisa and the team at the Mauritian FinTech Hub this week, so all good. So this subject matter, I think, is probably the most exciting pivot point for financial services in history. I think what we are witnessing is this convergence of the reality of the need for finance to really embrace sustainability in all shapes and forms. Now, let me just start with, I think, the basic grounding. I appreciate, and in fact, you know, Mauritius would be no exception. The term sustainable finance is something that has emerged more to the center stage in the last sort of 4 to 5 years, but actually has been around for a considerable amount of time in many forms and shapes. So with the passing of the Kyoto Principle in 2005 and the well-renowned Paris Agreement of 2015, how the financial services world began to shape and form its responsibility, its service to industries was a conjoined effort. But it's, of course, really coming to the fore now. I think 2020 has been certainly this pivotal year for sustainable finance. So in essence, what sustainable finance really is reference to financial services integrating its ethos, its products, its services around the models that are protecting the environment, serving the community, and being far more transparent and undertaking a greater level of scrutiny by the public, by the regulators, by a number of stakeholders in terms of governance principles. Sustainable finance, therefore, by definition, means a very strong consideration of the way in which capital allocation, resources to manage money, or to underwrite assets is far more impactful. So there is a definite underpinning of of sustainable finance in terms of scrutiny and transparency. There are also references to the term green finance and blue finance, and I think this is particularly relevant for Mauritius. Green finance has a broader leaning to environmental issues, as you would expect, and certainly blue finance is much more concerned about water preservation, the ocean economy and ocean diversity, for example. But sustainable finance is, I guess, an umbrella term that is really looking at these key considerations of E, S, and G from a global perspective. So with that said, I wanted to also just give you perhaps another lens, another way to actually look at the value of sustainable finance as being essentially the connective tissue that is absolutely critical. In fact, everything starts with finance and money, let's be honest, in helping us transition and accelerate our path to a net what they call a net zero carbon world, or as close to that as possible. And so for those of you who are unfamiliar with the Paris Agreement set the stall really for the financial services industry to do whatever was necessary by 2030 to keep global temperatures below a 1.5 to 2 degree increase. And that is a considerable exercise when you consider the industries that are heavy emitters, or the industries that are actually going to need as much support from a resource perspective, financial resource perspective, to transition, either to cut emissions or to deliver the necessary services to aid our transition in a safe and environmentally friendly way. So at Redsand Ventures, we are focusing on investment and innovation opportunity in sustainable finance, which is enormous. And we've made some bets. We've made some bets on some themes. Those themes are highlighted here. I do apologize. That was my doorbell. I do apologize. Amazon transportation works, boy, in this country. So anyway, so these industries are the key industries for us to be able to really secure a safer, cleaner, more environmentally friendly future. And that is our definition of it. And while we've picked these themes as, if our world doesn't put effort into helping these industries transition, we'll all be in a pretty tough space. I'm going to call out the ocean economy example as a use case because, of course, this is a Mauritius platform, and what could be more important? But let me just bring this to the fore. I don't know how many of you have been involved in the real estate world or the construction world, but I have cut my teeth on project financing in sustainable real estate, mostly in the Nordics. And I had no idea, but construction is probably one of the biggest emitters in terms of emissions, right? Gases, and of course, the electricity power used to support construction is about 50% of the world's supply of electricity, right? So 50% of the world's demand for electricity goes into construction. And this pandemic aside, all right, but the trajectory for construction was really a very kind of concerning forecast, where we were set as a globe to add the land space of Japan to the planet in new buildings, right? Every single year for the next 10 years. You can imagine what kind of pressure that would place on the planet. So these are, food security, health, of course. I'm going to touch a little bit about on that in terms of, the role of, how we think about health prevention from a financial services perspective. But these are the segments we care about and think are absolutely crucial. Of course, there are others in making sure that we actually live a greener, more prosperous future. So let's move on. So I hope you can see this this graphic. I'm sure it's been doing the rounds certainly in the last 6 or so months, but I think it does visually bring to the fore, the waves of challenge we are facing as a globe. Climate change, as I've said, is nothing new, but I think for so many quarters, besides the certain activists and politicians, for the most part, economic participants have been ignoring climate change. And some of the biggest countries who have been the biggest emitters, no names mentioned, elections aside, that's a good sign, have not been positive contributors to actually really intervening into this. So we now are faced with a very, very interesting situation where this pandemic has brought so much of this to life. Our exposure and sensitivity to the environment through this pandemic has meant that for the most part, we are feeling the aftershocks and actually will continue to go through significant economic pain due to a biological or a natural event. And whilst, I'm not here to debate the actual indirect, dotted or direct line from the virus to its organic or non-organic source, one can see that, the kind of devastating consequences of how closely aligned we are to our environment and the exploitation of that environment on our economic resources and our economic stability. However, the difficulty that we face as a globe is also a huge opportunity. And for those of you who are unfamiliar with this man, Mark Carney, I suggest you do your research. I'm sure if you're in finance, you'll know who he is, but he was the governor of the Bank of England for a number of years, and now he is the UN envoy for climate change. And he has been the stalwart of warning the financial services industry for a number of years on the impact of climate change and how the financial industry and large corporates together had a huge responsibility and still continue to have a huge responsibility to actually lead the way from the top. So much so, and I think just in The Guardian yesterday, he was calling for a complete link of executive pay in banking to be linked to the Paris Agreement Accord. So very vocal, but he also sets the stall for how this is a major economic opportunity. And actually, there is a very interesting paper released at the beginning of this year, pre-pandemic, funnily enough, by Oliver Wyman, who begins to start monetizing the opportunity of climate change in new financial products and services. And they estimate a $50 to $150 billion of incremental revenue to financial services should they be able to serve the needs of this transition effectively. So what I'd like to do now is I'd like to turn to one of the use cases that I think really brings the effect of COVID-19 and sustainability to the fore. And this is really very much diving from the environmental component of sustainable finance to the social implications. And I'm sure this is, whilst this is a UK example, I'm sure this is, a pattern we'll see in many countries. And I can't talk for Mauritius, but I'm sure you'll recognize some of the relevance of this data. So what this pandemic has brought to the fore immediately, of course, is economic concern at the individual, small business, right through to a corporate level. And 1 in 5 people in the UK are really concerned about losing their job. And I think that's probably higher now because this data is about 4 months old, right? So a lot can happen in a quarter. And this is really bad. We are now witnessing the highest rate of suicidal thoughts and unfortunately, attempts at suicide than we've ever seen before, right? So tremendous levels of stress we are witnessing as a society because of this economic upheaval to the tune of nearly 20%, right? Unheard of. So mental health is at an all-time high. And, whilst we as certainly, the team at the Mauritian FinTech Hub have been looking at innovation in financial services with a very strong link to financial inclusion. The one thing that we've always been looking at is really comes down to gaining, allowing people access, empowerment through access to financial products. And this is now becoming even more of a critical requirement. One third of the UK population are worrying about their finances, which essentially, when you see some of the other graphs I'm about to show you, points very closely to the fact that we've been living in debt for over, close to 15 years post the financial crisis, certainly. So we're a very debt-ridden society, and many, I think we're a debt, global economy, so that should be no surprise there. But that's a very bad place to be for many people. So if I just bring this to life in terms of the vulnerability, and this is, again, going to be a pervasive theme when we look at sustainability and the role that finance has to play in financial inclusion, is this bottom of the pyramid vulnerability, which is just getting larger and larger. And this is not peculiar or particular to developed countries. It is a pervasive theme. So this is real data, and I know it's a lot to take in, but essentially what these two bar graphs are demonstrating is that there is a very strong correlation between the risk associated with unemployment and those that have more, gig economy jobs, more jobs that are the self-employed, the kind of the micro-entrepreneur ecosystem within a population. So those people that are working for, wages, daily wages, or paid a minimum hourly or daily rate are obviously the most exposed. And you can see that they really represent a significant part of our population. Almost close to 50% of our economy are these low earning workers. And so any upheaval, and this one will play out demonstrably, and it is already showing that, is going to create a huge economic burden on the UK economy for sure. And so sustainable finance has its, a number of use cases it has to solve in parallel, but this is going to be a huge task to wrap our heads around. And, I think the challenge is that actually, when you look at the role that innovation in financial services, even just solving, consumer protection, so on the right-hand side, consumer protection, the lack of financial and digital literacy, access to broadband, just pure education, and basically access to basic services around participating in the digital economy, because so much of the future of our economies are going to be digitally driven. This is, an exclusion challenge, let alone the wave of potential crime we are going to see because of this pandemic, out of necessity. So there'll be all these statistics are likely to rise. And so you're beginning to see the role that digitization and the role that fintech can play in alleviating some of this pain. And that bar graph below is, again, quite rich in data, but it does demonstrate that as inclusion grows, so GDP grows and consumer confidence grows. So there is a huge benefit and motivation, I think, by all economies to digitize, and now more so than ever. Certainly, this is one of the kind of big lessons of the last 6 or 7 months. So where has FinTech fared in light of COVID-19? And it actually, for want of, not drilling down into too much detail, has fared incredibly well, right? There's been some better, segments within FinTech, better performing segments than others. But overall, the sector has performed very, very well. And here again are some great examples, mostly UK examples and European examples of how that's shown up. So if we look at the sectors of how we define FinTech for the purposes of this discussion, I've just broken that down into challenger banks, online payments, banking technology or banking infrastructure. So open banking would fall into that. Anything to do with financial analytics and financial data, and then of course lending. What we've seen is, predominantly all segments have benefited. There have been some challenge in, for example, the area of challenger banks. What we'll see is, whilst some have performed very well, there'll be a natural consolidation. And you can see from my previous slides that these challenger banks generally serve the most exposed and the most vulnerable. So they will be challenged in terms of their own customer base. Online payments has been, an incredibly successful place to be, and strong activity continues to grow. Of course, we are limited in dealing with cash, or should be. So not to say the cash economy will die, but it's been certainly put under its probably biggest test ever. Banking technology and infrastructure, I think, the demand for online payments is driving deeper needs for wholesale, commercial and institutional banking to serve in a digital way. So that's all good news. And then there'll be definitely, needs to address greater analysis of how people are using financial products, who's more exposed, what are, credit risk structures going to look like, instead of, backward looking, more forward looking. How do risk profiles adjust for changing economic factors? And this has a huge implication for the financial data and analytics space. And then lending, this is of course at the root of everything. We're going to have to really move out of this crisis through greater access to liquidity, and most of that will be through debt financing. So a lot of opportunity there. And then, FinTech for Good has really earned its stripes, and again, I'm sure there are plenty of examples all over the world in terms of kind of great strides taken by the FinTech community. But these are some examples. So PayPal did a great thing. I mean, they have deep pockets and, certainly a very broad portfolio and reach, but they waived a lot of their fees for a number of months in order to facilitate the release of loans. They're not only a payment infrastructure, but they have a very strong lending portfolio as well. Iowaka is a big lending platform and aggregator in the UK, and they had to come to the rescue of many a high street bank because these high street banks couldn't facilitate the issuance of loans, government loans to SME businesses, and Iowaka came to the rescue there to really speed up the release of business loans. The likes of Crowdcube, many of you will know who Crowdcube are, but it's a crowdfunding platform, very pervasive. They actually ran a campaign for startups that were trying to aid. So it was like a second layer support for actually raising money for those startups who were doing the best thing for, the most economically vulnerable. Funding Options is an aggregator on lending products. So it's like a supermarket play, and they brought on an extra 20 lenders during the crisis just to help people find sources of loans. And then, the likes of Fronted and Credit Kudos have really honed in on those that are having, either those that were self-employed or looking at self-employment, to educate them on financial resources and how to get going and how to really speed up their financial and digital education in this very troubling time. So I've given you some examples in terms of how FinTech has come to the rescue through this context of the pandemic, but obviously the greater opportunity is, pandemic or no pandemic, sustainable finance is here to stay. And it is, you know, such an exciting space, because whilst the 2008 financial crisis and bailout of the banks was really the, I guess, the major catalyst for the last FinTech boom, what we have now is we have sustainable finance driving a different type of FinTech opportunity. And by this, I mean, the previous wave or multiple waves were all spearheaded by the liquidity crisis for and financial inclusion challenges, right, provided by our banks not being able to serve the individual. Now what we have is we have huge pressure coming down from regulators to big walls of capital, big players that are responsible for the corporate and enterprise transition to a greener state, that net zero target, to really force through an accelerated pace, big financial institutions getting their act together. So the pressure point is now coming from both sides, right? And because it's time-stamped and because we all live on this place called Earth, and there's kind of no getting out unless you're Elon Musk, all right, or can afford to join his party, we've all got to figure this out together. So it's an incredibly tight time frame. We're all working towards, you know, we've got political upheaval, we've got social upheaval, and we've got economic challenge to boot. And so this is driving a huge amount of new interlock, a huge amount of challenge, and that challenge can only be solved in the time we need to solve it through really great minds. And those great minds are incumbents, you know, working, you know, to move their organizations to deliver on the promise of better social, environmental, and good governance in products and services. But of course, the creative minds and those entrepreneurial minds that are going to deliver, you know, more choice and more clarity and more transparency that we all need and demand. So there are a number of ways that FinTech is going to come to the fore, and De Beer Group, you know, have stated very boldly that they see tech and ESG as being basically the top two themes for the 2020s. So we're in good hands, and this triangle is just a way in which you can kind of see the layers of intervention and innovation opportunity seeping through. So innovation around the UN SDGs is something that's already happening. A lot of the startups and incumbents, everyone who's playing within the sustainable finance community is using the backdrop of the SDGs to define how they are relevant and how they can be governed. We, of course, are needing to look at more liquidity, more capital allocation in both public and private markets. We are needing to look at new incentivization structures for those who are receiving the capital, those that are motivated to serve industries, and as you see from Mark, those that are actually in very powerful seats in some of the biggest, most influential financial institutions. Incentivization is a big, big theme. And then, of course, all of this lands on data, right? And ESG is the biggest data challenge, right, ever to face financial services. And I'll touch on some of that in a little while. So what are the big themes? What are the kind of big clustered themes around sustainable finance and technology, and therefore FinTech? That these big technology themes should be nothing new to this audience, but they will have a resurrection, or are having a resurrection, in underpinning the innovation that is so needed, as I've kind of outlined in the previous slide. So almost all of the propositions I'm looking at, or I'm certainly putting my head to in terms of venture builds, have a component of this kind of technology. So So that's a backdrop. I mean, it's been a whiz tour through the importance of sustainable finance, the importance of the innovation coming into the sustainable finance world, how pervasive it is, why it's so different from the past. And what I wanted to do was actually just bring this down to a particular example. It is huge in even in its own construct. So I'm going to pick on one segment within the ocean economy, but I thought, given I'm speaking to a predominantly Mauritian audience today, I thought, what better use case to use. So this is a particular area that I'm focusing on simply because not only am I a big ocean fanatic, but of course our world would be nothing without the value and the depth of what our oceans provide to us as a natural resource. So the data all varies, but the OECD identified and kind of quantified the value, the economic value and economic output of our global oceans to be about 1.5 to 1.6 trillion dollars, and that's the inherent asset that is our oceans and the economies that are reliant on our oceans, right? Whether that be food, whether that be transport, whether that be tourism, and more. So what is super interesting is that the preservation of our oceans is now something that is becoming a unique study. Just the fishing industry alone and the whole aquaculture area and the richness of the biodiversity challenge associated with overfishing is one segment. But how we incentivize the players, the stakeholders, whether they're existing or newcomers, to do the right thing for preserving our oceans, and in some cases, as you can well imagine, resurrecting or renewing ocean resources is so important. And the term blue finance is now being used, and so the allocation of capital and the construct of how that happens is something that is a big topic and therefore a very close link to the area of sustainability and bond allocation, debt allocation in terms of blue bonds, and they come in a number of different shapes and sizes. But I'm going to pick shipping. This is because I'm working on a project mostly out of Athens at the moment, which is super interesting. Shipping is an age-old industry. It is an industry that is very, very diverse. It's not just about, the physical vessel on the sea, as whether it be cargo or whether it be leisure and hospitality. But these are full economic systems in and of themselves, right? From the recycling of ships to the building of ships to the maintenance of ships. It's an incredibly capital intensive activity. And it's faced with this quagmire of challenge, an age-old industry with aging infrastructure. Ships are aging, which is causing a big issue and has for a number of years, in fact, decades, on the emission status and the pollutant, the potential or real pollution caused by ships of all shapes and sizes into the oceans and in the ports. But also the exposure, given climate change, and it's a chicken and egg situation of shipping corridors to climatic events, and how that is exposing our supply chain activity. And then, of course, as I've touched on, marine pollution is just a huge subject matter. And not only is it just the pollutant, but the actual degradation of biodiversity. I mean, we are seeing basically the extinction of 20 species almost every day, right, in our oceans because of the pollution and the marine the exposure to emissions and pollutants in our seas. But 73% of shipping companies still have made no attempt to report on their risk or become custodians, all right, forerunners of ESG in terms of how they adapt. And that is a very complex issue, and we don't have the time to go into that today. But for good or for bad, this is a big, big issue. It's a big issue for those within the financial community that see shipping or the outputs of shipping, specifically supply chain activity, as a major mechanism either to underwrite, capital allocate, invest, or insure. So it's a big, big consideration in terms of how do we look at shipping and how do we turn it around. In addition, and this slide is not specific to shipping, but it is very centered on one of the drivers that will affect shipping, as it'll affect every industry, is that the evolving nature of ESG will be very much predetermined by the forces and the drivers of regulation. And it's already happening, right? So I've mentioned the Sustainable Development Goals as being one component. They are not, it's not regulation, it's a framework, obviously, for those of you in the know, to actually assign activity, economic activity, production and output to how we look at preservation of our climate and preservation of our communities. But for the first time ever, the EU is leading the way in much of the thinking around how regulation and innovation can come together. And in July, we saw the release of the EU taxonomy for sustainable finance, which for the first time ever is aligning the definitions of what a sustainable investment means for industry players, right, capital allocators, which is a huge move. So there is now an understanding, a harmony amongst fund managers, asset allocators, to how they understand, how they interpret what is really a viable investment from a green or sustainable perspective, which has been missing before. So huge progress. And then the TSFD, so the Task Climate Force Directive is looking at these components of policy, legal, technology, market, and reputational risk as big considerations for disclosure. So in the next 3 years, companies of a certain size will have to adhere to the TCFD in terms of what they are emitting, right? And that is, this context is what is going to drive the sophistication and the interpretation and the harmonization of how we define ESG criteria, because right now it's a very confusing mix, all right? We're still very much at the beginning of this. So if we come back to the blue finance ocean economy challenge, what all this regulation will do is very clearly put pressure on an industry like shipping to be far more acute on their disclosure. So whether you're looking at capital allocation and investment into shipping, whether you are in the insurance industry looking at fleets, whether you are interested in trading activity assigned with supply chain, commodities, the movement of goods and services, those goods and services are very much beholden on the activity on the seas, right? If something goes missing or something is held offshore, then that's, exposes markets hugely. And then, of course, financiers lending, because of, as I said, shipping is incredibly capital intensive. All of these players are already undergoing their own evolution because of the regulation, the directives, the frameworks. So they are going to be putting preferential allocation to those industry players that are adhering, and shipping will be exactly the same. And what's interesting is that, now what we're seeing is the challenge of how to be a good custodian will very much default to understanding the data that your activity is responsible for. So the data, so whether it be climate data, whether it be operational data, whether it be the environmental data around you, as a shipping company, these will be all the considerations that you will have to report on. And should you not, you basically be at the bottom of the pile when it comes to applying and qualifying for financial products in the future. So this drive will change this industry radically. And there will be a huge continuum of those that are more progressive and therefore more successful. So there will be a real market dynamic, a real shift in an age-old industry like shipping. And this can be applied to, I've mentioned the construction industry, but it can be applied to almost any major industrial industry from an ESG perspective. So very, very interesting, fascinating times. Again, I just wanted to bring together some of the areas of innovation opportunity as it pertains to ESG. This is actually, in all fairness, I'm applying this to shipping in this example, but each of these areas could be applied to almost any, transitional industry. And they are hugely underpinned by technology. In fact, all of them are. So, I've been analyzing the opportunity in, these kind of key pillars of financial services, and looking at financial instrument construction, trading platforms, obviously all kinds of data management systems, the whole ESG tech, can you believe they even call it that, which is no surprise, regulatory and compliance analysis. How does the regulatory scrutiny also become a reg tech opportunity? A plethora of opportunity when it comes to sustainable finance. And I think hopefully I've made my point that, again, I've never seen such a richness in such a short time of the kinds of capability and opportunity for the fintech, community to take hold of and really get stuck into. And again, it's moving at pace, which is a really good sign. It's much needed. So we are seeing a number of players coming into the market already. It is my role to survey this kind of activity, both for the client activity I do, but also from our own investment interests. And the funding rounds, obviously, the investment interest is growing, which, fintech would be nothing without. The tailwind of investors coming in behind and actually, putting their capital to work. So fintech is a super interesting space. It's now certainly kind of growing in its recognition and its use case. I don't think there are many a VC that won't recognize, certainly the viability and the calling of many of these players. There's still a long way to go, but as you can see, there's so much richness in terms of the opportunity ahead of us. So very encouraging to see. So I think that's me. I wanted to make sure I left some time for questions, but hopefully I've done you a good enough service in terms of taking you through a whirlwind tour of sustainable finance and the innovation imperative. And yeah, I'd love to take questions if Lisa, if you want to help me.
Yeah, so thank you so much, Nicole, for what was a very, very interesting talk. And it certainly seems like it has garnered a lot of interest from those present, because we do have quite a few questions submitted. So we'll try and get through a few of those now. We may not get to all of them, but the first we've got Redsand Ventures invests in impact ventures and in great teams. What are great teams to you?
Great teams, I think. Well, and from an entrepreneurial perspective, great teams are teams that essentially show tenacity. There are, people would kind of default to those that have great experience, great skill sets. That's all great. And yes, take that as a tick in the box. But for me, in terms of what we look at, very young ventures are all about teams and teamwork. And one of the biggest stresses for any young business, any entrepreneurial venture, specifically in times like this, is the agility and the ability to see through some ups and downs. So I look for a diversity of skills and resilience, and really, an unfaltering belief in their vision. I think hopefully this audience has seen some of my passion. I've muted it down a little bit for today's purposes, but I'm deeply passionate about the subject matter. And that's something that I look for as well in a team dynamic.
Great, thank you. Okay, so the next question is, do you think we're close to a tipping point where non-green investment will start to be seen as stranded assets with worse returns even before they consider sustainability?
Absolutely, that's a fantastic question. We're already seeing that, right? So we're seeing, HSBC, BlackRock, all state, certainly from a listed perspective, from their public market interest, they'll be moving away from certain asset classes. The obvious is fossil fuels, but as you can see from my examples, I didn't even mention that, or the energy segment, because I think so many industries have a challenge. And of course, this is a big tension area. Multi-fund managers probably have more headroom to actually blend the transition over a number of years, although not too many. As I've hopefully made the point, we don't have decades. We have less than a decade to make this transition, which means their portfolio constructions are exposed. So the transition requires multiple activities in parallel, ways in which they think about new markets, ways in which they actually begin to understand new market makers and the technicalities associated with those markets, whether it be, new energy, renewable energy sources or geothermal sources, or new ways of constructing, for example, real estate. Okay, how do you look at sustainable raw materials? So there's a big technical education that has to happen with capital allocators, so that they can actually begin to move capital allocation into new market making activity. Then they have to figure out essentially how they aid their existing portfolio investments, those listed companies. How can they get better at aiding, guiding, monitoring capital allocation, so they're on a trajectory to be greener and be better at what they do? And then, of course, there's a very tough decision to stop doing things. Now, the one thing I will say is that the bigger the player, very often they have a double whammy. Most insurers are also huge asset managers, right? And so this is causing a very, very tough transition for those big underwriters who are actually looking at risk of both their asset base and the need to transition those assets from an underwriting perspective. But have we reached the tipping point? Yes. There is a ton load to do, and the continuum is deep and wide, but I've hopefully tried to give you kind of 3 macro areas of how that transition can be affected.
Thank you. So the next question relates to green finance innovations. How do you see corporates working with startups to manage the current disruptions, mainly technological, in the financial industry? Do you have case examples?
Yeah, I mean, from a sustainable finance perspective, I think we are about to see a new wave of interlock and an opportunity for corporates to begin, really taking their innovation imperative, making it more of an imperative than it should have been before, because they have a timestamp, right? And the need to actually get better at how they align to new frameworks, new policies, new emerging regulation, but also begin to look at their own products and services from an ESG perspective. And the key things that will drive that is access to new types of technology, emerging technology, immersive technology. And that is likely to come from outside their organizations. Let's be honest. I mean, we're all deeply stuck in, in a world that's definitely changing at a pace that almost no one can, keep up with. Even the deepest, broadest institution is going to have to look outside to help it understand new forms of interpreting the world in a different way and monitoring its impacts in a different way. So we can't understate the importance of data, but the data itself that is going to be integral in this transition is going to be a new form of data. It's going to be climatic data, scientific data, unstructured data, for example. And all of these data sources are very unfamiliar to the financial services world. And therein lies an opportunity for the fintech community to get hold of this and actually begin to provide some of the great innovation necessary to align the need for transition to financial products and services. And so I definitely think, that partnership opportunity, that collaboration opportunity is now coming thick and fast.
Thank you. So how do you see small islands like Mauritius jump onto the sustainable financial services bandwagon to solve some of their pressing ESG challenges?
Well, it's such a key question, and wow, I mean, what a use case Mauritius is, right? So if I had a blank canvas, I would say, Mauritius has been a stalwart, certainly for the subcontinent of Africa, in so many things. It's been a gateway. It's had continued to build amazing trading relationships with many a country in Africa and the world and the international community. It's also an incredibly important capital gateway, right? So money flowing off the continent of Africa through to Europe and Asia and vice versa. And of course, it has its own local economies, right? So this pandemic and of course, the terrible oil spill are just real local economic challenges for the country. So there will be a microeconomic, or it's kind of technically a macroeconomic challenge and opportunity for Mauritius to adopt innovation and look at sustainable finance for its own uses. How do we embrace a much more entrepreneurial status quo for Mauritius? All right, how do we get more digitized? How do we use this pandemic as a lesson for everyone to actually look at how we build up the SME base, how we digitize that SME base? How do we bring, the barometer of any economy, which is young businesses, to the fore faster for the benefit of Mauritius? And then, of course, there is, the stalwarts, the larger players, the enterprise players, the corporates, the institutions, and how they get better equipped to actually embed some of the interesting products that could benefit them. So whether it be blue finance products and the allocation, biodiversity is a big theme. So how can Mauritius benefit from actually harnessing its natural resources for the good? And how does the financial services industry of Mauritius play an incredibly important part in attracting capital from the outside world to do that? So there is certainly some work going on in the blue bond space to do that. And then how does it become, again, the custodian for ESG transparency and disclosure for those international capital flows going into the continent, onto the continent? How do we avoid, how do we give confidence to international capital allocators and investors that what comes through Mauritius is actually going to be monitored very, very carefully? So as a corridor play, as a gateway, how does Mauritius create confidence to, its counterparty relationships that it has ESG right, front and center of its strategy. And I wouldn't say a reinvention, okay, of the investment management industry, is on its way, but is definitely a rethink globally of how capital allocation and that capital allocation and ongoing monitoring is an innovation opportunity, and every jurisdiction has to think about that. So those are some examples that I think would be fantastic for Mauritius to cotton onto and drive both, at different levels, economic thresholds.
Okay, so we're sort of heading towards the end of time here. I think we might have time for a couple more just quick answers here. So the next one is, how would you suggest we go about incentivizing the players to tap into the ocean economy?
So we have to, I guess, kind of decompartmentalize players and the ocean economy because it's huge. But if we just take fishing and shipping, hopefully I've given you some ideas as to how certainly disclosure, which is going to be a kind of a global phenomenon in financial services, how that will drive behavior. So the TCFD, for example, is going to be something that many a country will adhere to, and the expectation is that those players, whether they be large fishing production players or shipbuilding entities, or anyone playing within, the shipping ecosystem, will have to begin to get themselves ready for reporting and disclosure. And some of that will be very sophisticated and some of that will be less sophisticated. But that attempt to actually become more transparent is a good signal. What will drive that is actually a bias from underwriters, insurers, lenders, advisors, and capital allocators to those who disclose more, right? And disclosure will be a continuum because the data is going to be something that will evolve. The nature of the data and the data requirements will become more sophisticated. So it's certainly going to be a journey. And, everyone is grappling with what that journey looks like. But so those players will, just if we just take disclosure as a theme, I mean, getting better at disclosure will be the market differentiator for many an incumbent player.
Okay, great, thank you. And I think our last question for today, briefly, how would you define sustainable fintech? Is the focus more on using fintech to drive sustainable finance, or on the fintech being driven on ESG principles?
So sustainable fintech is any technologically based business model that enables the financial community to effect the change that has a positive impact on our environment, on our communities, or the individual. That's how I see it, right? So any business technology business model that enables the financial community to have a greater impact on the environment, on the individual, and on a community is a play. And that can be, a particular classic fintech service, so driving a lending platform for greater liquidity, for growing SMEs, right through to new risk models associated with more sophisticated players, right? In terms of those transitional industries. It is discrete business models, challenger banks, lending platforms, crowdfunding platforms for retail investors to want to be being able to allocate the capital that they have to great causes, right through to the deep tech that helps financial institutions understand risk better.
Thank you so much, Nicole, and thank you so much for a very thought-provoking session today. And I'm sorry to those people who submitted questions that we were unable to get to. Unfortunately, we have kind of run over our time allocation here. But I hope that you have all enjoyed today's session and have managed to gain some really good insights into this really important emerging sector. I'd like to take this opportunity to thank Nicole for her participation today. So thank you for being here and joining us. And I hope next time to see you in person. Yes. And thank you also to our participants for coming today and for taking part in the discussions. I hope that you've found it very interesting. Before you go, I would just like to invite you all to participate in the webinar that we are holding tomorrow. We do have a very interesting session on financial crime and the challenges of identifying and responding to financial crime. That session is going to be led by Mike Rees, who is a former group CEO of Standard Chartered, a current board member of the ING and a current board member of MAF. So please do join us for that. Will be taking place at 2 p.m. tomorrow, and I'm sharing the registration link in the chat function below for those of you who would like to join us. So thank you again for attending, and I do hope to see you again at future math sessions. Thank you so much, and bye-bye.